starting our second unit. So I need everyone to spin around and look this way. We're not going to start an applicant yet because I need you to understand what we're doing differently now. So we have finished our first unit for accounting. The first unit in accounting really deals with a service business organized as a sole proprietorship. Okay, what does that mean? When we go out in our business and do something, they don't have a product. I cut hair, I mow lawn, I give a golf lesson. So if I give a golf lesson and that golf lesson is $40, that is $40 of sales that I just get to count in. Okay. Now, when we switch to a merchandising business, that means I'm selling a product. So now I'm going to sell you a golf club. But here's the thing. Am I making the golf club? No. I have to buy that golf club for somebody else. So I'm going to sell Cody a golf club for $120. That golf club cost me money. Let's say that golf club cost me $60. How much profit did I just make? $60, right? Because the cost of the club has to come off of the sale. So when we go through in a merchandising business, we have to keep track of the stuff that we buy. And the stuff that we buy is going to be in an account called merchandise inventory. Merchandise inventory is going to be an asset account, and it's going to have a debit normal balance. Sound good? We own it. If I have 700 golf clubs sitting over here, the business owns it. It is worth money, so therefore that is going to make it an asset. But here's the thing. What we need to know during our fiscal period is how much merchandise do we buy every year? So when we go through and we buy items that we're going to turn around to sell, we are going to be using this account called purchases. Purchases is a cost account. This is a new classification. So before we had asset, liability, owner's equity, revenue, and expense. We had 5 classifications. Now we have 6. Asset, liability. Now instead of owner's equity, we're going to use stockholders' equity because we are going to be doing a corporation. We have revenue, but now we have cost because I have to pay for those golf clubs. So what does the cost do to our owner's equity? Does it make it go up or down? Down. So that is why cost accounts are going to have a debit normal balance. So purchases has a debit normal balance. That's where we keep track of all of the stuff that we buy. So every time we buy something, we're going to be using this new account called purchases. And what's going to happen at the beginning of each fiscal period, purchases is going to have a zero balance to it because it is a temporary account. We only have it open for the fiscal period so I can know in this fiscal period I bought $700,000 worth of merchandise. Now in this next year I bought $750,000 worth of merchandise. It's important information for a business to know how much they buy each year to turn around and sell. But here's my question. At the end of the fiscal period, do I have nothing in my store? Is that really what happens? If Toys R Us last day of the fiscal period is today, are their shelves empty? No, that wouldn't make sense. So they have to keep track, and then they have this continuing account called merchandise inventory where they keep track of all of the merchandise all the time. But purchases is used just to record what they buy every year. Okay? So we have to account for these costs. Merchandising business organized as a corporation. So a corporation is going to be one of the widely used business types that is out there. They are harder to start, and in a corporation you have to have what are called articles of incorporation. And it has to be filed with the state that you're in, so you can't just go through and say, I'm going to open up a corporation and I'm going to just call myself Grassel Corporation. You have to go through and do a lot of work on that, and that needs to be set up and filed, and there are different tax laws that go with corporations versus a sole proprietorship. We are also finding that as our business gets bigger, we use more accounts. Would you agree? More things to keep track of? So as our business gets bigger, we're going to move from our general journal, where we put every single transaction into, to using special journals. Okay? So what does that mean? A special journal means I'm only going to record one type of transaction in this journal. It makes it much easier. So we spend time first realizing how to use a journal, how to post, and then doing our end of fiscal period work. Now we're going to go through and say, all right, anytime I do a cash payment, I'm going to use a cash payments journal. Anytime I have money coming in, I'm going to use a cash receipts journal. Anytime I have a sale on account, I'm going to use a sales journal. Anytime I buy merchandise that I'm going to turn around and sell, I'm going to use a purchases journal. So Chapter 9 right now is going to walk us through all of our special journals that we're going to be using. Now, the first journal that we have up here is our purchases journal. And if we look at this purchases journal, kind of looks like another journal, right? Like our journals before. When we start on the left-hand side, the first thing you'll notice is the purchases journal has our date. The very first column is going to be for our month, and then the second column is going to be for our date. Then when we look right here in the middle, before in our general journal, our heading up atop said account title. Would you agree? For Rico Sanchez, it said account title. What does this one say? Not account title, but account credited. So what does that tell me? Whatever I write here has to be credited. Okay. Now here I have what has typically been called our source document column, but it doesn't say source document, it says purchases number, because the only source document that is going to go in here is going to be a purchase invoice. Then I have this trusty, tried, true column called post reference, when we go through and take information from our journal and put it into our ledger. Then I have a number column, but look, something's crazy. How can my debits and credits equal? I only have one column for numbers. That's why this is the easiest journal. Because we use our purchases journal when we go through and buy merchandise on account. So I'm going to sell golf clubs. I go out and I buy some Titleists from the Titleist company that I'm going to turn around and sell in my business. So I'm going to buy merchandise on account from Titleist company. So the amount of product that I have coming in or purchases is going to be, let's say, $1,000. And how much do I owe Titleist company? $1,000. Would you agree? Now, before we would have done general debit, and then we would have had to do general credit. We would have had to do two columns, two lines. When you buy supplies on account, remember how it would take two lines? And then we'd write the same amount twice. But this, by using a special journal, we just have to write that number once. But when we look at the heading of this column, there are actually two accounts in here. We have the account purchases as DR, and we remember that DR is the abbreviation for debit. And then it says accounts payable credit. So if I put $1,000 in here, that means I'm debiting purchases and I'm crediting accounts payable. And now this is where it gets even crazier. What is going to happen now is before we had one ledger account that had all of our accounts. We had cash, we had accounts receivable, we had accounts payable, then we had our expenses. So right when you did Rico Sanchez, when you posted, you just had one book, right, that you put stuff into. Now, what we're going to do is we're going to keep our accounts receivable separate, and we're going to keep our accounts payable separate, because that's important information for us. When we look at the school district as a business, they have one person that is in charge of accounts receivable and accounts payable. Both. So I have one person that does accounts receivable and payable, because they have to make sure they're getting their money in, and they have to make sure they're paying the money out, because if we don't pay their bills, then it's kind of bad for our business, right? So we have one account called accounts payable. And that is called a controlling account. And then I have a whole separate book or a separate ledger that has each one of my accounts payable people. So if all of you in here were people that I buy golf equipment from, what I need to know as a business is I owe a total of $15,000 to all of my accounts payable people. Would you agree that's important for a business to know the total amount that they owe? But I also need to know that I owe you $200, I owe you $700, and I owe each individual. So in my general ledger, I have this controlling account called accounts payable, and then I have a separate ledger that I have the name of each individual business that I owe the amount to. So that is why you will notice that there is an account there that says accounts payable. We are no longer going to write accounts payable Don's Quality Market. We would just have Don's Quality Market. And then accounts payable is going to be its own separate whole entire account. Same thing will hold true for accounts receivable, but today we're just going to focus on accounts payable. So we're doing a merchandising business organized as a corporation, and we're going to start using special columns. So let's knock through this purchases journal one. This is always my easiest and favorite journal to do. So the directions read, the purchases journal for Lambert Hardware is given below. Your instructor will guide you through the following examples. Using the current year, journalize the transactions on page 10 of the purchases journal. Purchases invoices are abbreviated as a P. So you'll notice in the upper right-hand corner of our journal, it already says page 10. So our transactions, we can see that we are using the month of October. So the very first thing I have to do is get in OCT for the abbreviation of October. And then the first transaction is dated the 2nd. So I'm going to put the date in the 2. That is easy enough to know. Now, when I read the transaction, it says, purchase merchandise on an account from American Tools, $1,230, P116. All right, so what I have to do in my purchases journal and under account credited is put the name of my vendor. The name of the vendor is American Tools. I don't have to do accounts payable vendor tools. I just do American Tools. Now, for my source document, I don't have to do P116 because the heading on the top already says purchases number, so I'm just going to do 116. And then I'm going to put $1,230. Then I'd repeat and do the same thing on the 7th. Purchase merchandise and account from Harris Manufacturing. Source document is P117. And then it's for $480. You guys like this journal? No? It's pretty easy. I like it. So the 11th goes to Keesler Supply for purchase invoice number 118 for $780. Now, what you will notice, and this is very important because this is a red flag to you, if you ever are missing a number in here, that means you've missed a transaction, because they should always be sequentially ordered. When we had a general journal before, you had sales invoice, you had merchandise invoice, you had all different types of source documents, so they wouldn't be consecutively numbered. But in my purchases journal, they will always be consecutively numbered. Now, the last direction says total and rule the purchases journal. So how many days are in October? 31. So I have to put the last day of the month. Now, am I going to write total or totals? Total, because there is only one number. I don't put anything in my purchases number. You take out your handy dandy calculator. I got 2,490. Does anyone concur? Yes? We did okay? Now here's the thing. How do I know if it's right? What did I just do to see if it was right? I added it up once, right? And I'm like, oh yeah, I got it right. What's the odds of me making a mistake adding it up once? How many times did you have to add things up when you did Rico Sanchez? A bunch of times, right? So here is my golden rule for you. Right now, I added it up, and I just asked you, did anyone else get $2,490? Well, you can't do that on a test. You can kind of do it on homework, but you should be able to double check on your own. You should add it up twice, and if you get the same number twice, the odds are it's probably the right number. Does that make sense? Okay. So that is section 9-1. Hey, how's that for short? Not too bad? You will find in classroom, I also did turn on your outline for chapter 9. And I wanted to let you know, next week, I do have a guest speaker coming in. Her name is Megan Hobble. She is a CPA. She is in the midst of sitting to pass her the rest of her CPA exam, Certified Public Accounting exam. She is a graduate of Seymour High School, went to St. Norbert College, and is now working for Schenck Associates within Green Bay. So she is going to be speaking to us about life as a CPA and what it's like coming up next week. Yes, I'm getting to it.